Households and consumers were looking to the Reserve Bank Governor Lesetja Kganyago for an indication of when interest rates will be cut. In his speech on Thursday afternoon, he made it clear that rates would not be cut until inflation cools down to the 4.5% midpoint target. On Wednesday, Statistics South Africa showed that annual consumer price inflation eased for a second consecutive month to 5.1% in December from 5.5% in November.
There isn't a discernible trend that shows that inflation is declining towards our target. And so, for as long as there isn't any sustained decline of inflation towards our target, and more importantly, that inflation stays there in a sustained manner, don't expect us to recalibrate policy. The cutting has got nothing to do with the time. It has to do with the state. So we are not time dependent, we are state dependent. And so what this actually means is we will be watching the key variables being the inflation outlook, the growth outlook, the risks attendant to that, the likelihood of those risks materializing or not materializing, and if we believe the risks are materializing, we will recalibrate policy appropriately.
Kganyago also warned that financing conditions are expected to remain tight, not only in South Africa but across the world. Economist at PwC Kganyago agrees and says the banks are already seeing an increase in non-performing loans.
People have used what they had, and now to try and finance that debt. People are borrowing to pay the other loan. So those are the kinds of conditions that are being faced. But certainly businesses are under a lot of strain. And that is something that, is something of real concern. But I think it's reflected in this growth number that he reflects today of 0.6%, that we can't see that given all these conditions that are being faced by whether you are a farmer or whether you are a technology firm, in order for you to continue to invest, in order for you to sustain yourself, you're going to have to go to this market that actually is finding itself in a very, very tight spot. So it's a very sad and difficult space that we're in.
On a slightly positive note, Chief Economist at Nedbank, Nicky Weimar, says although the economy is limping, there's no expectation of a sharp rise in unemployment.
We are seeing pockets of industries where there are retrenchment announcements in mining, manufacturing, but in most industries, I think the good news is that given that they're operating with fairly low staff levels, we're not going to see necessarily massive waves of retrenchments, but clearly with the economy limping along, it is a bit of a worry and it remains a threat. But at this point, a sharp rise in unemployment is not in our base case.
The central bank expects improved GDP from the last quarter of 2023, with output expanding by 0.4%. At the same time, it warns that operations of ports and rails has become a serious constraint, and together with electricity shortages, it says these constraints are expected to persist, severely limiting potential growth of the economy. Lesetja Kganyago, SABC News, Johannesburg.